So, you want to be a real estate investor, but where do you start? How do you know what information and sources to trust? That's where I come in. I'm Jonny Cattani, and this is the Investor Relations Real Estate Podcast. Hey guys, real quick, before we start, go to investwithcattani.com and download my free ebook, Is Commercial Real Estate Recession Proof? Now to today's show. What's up, guys? Happy Friday. Welcome to another episode of Friday Follow-Up here on the Investor Relations Real Estate Podcast. I am your host, Jonny Cattani, and we have made it through another week. Very exciting stuff happening. If you've been following along, I'm in the middle of my first raise, and that is going very well. Had my first official commitment come through today, which is amazing. Very good news with more than most likely coming next week. So a lot of good stuff there. This is going to be another short and sweet episode. Basically what I'm going to do, if you've been a long-time listener, you know that I love economics. So I am going to give my economic outlook for the next 12 months as I see it. Now, remember, I'm not an economist. This is pure speculation. This is based off talking to economists, the various guests on my podcast who are far more knowledgeable than me, as well as, my own research, a lot of obviously data, a lot coming from Marcus and Millichap. If you don't follow them, I would get on their list because they're constantly sending out reports and videos with just a lot of data and outlook as it relates to commercial real estate, which is awesome because a lot of stuff can get jumbled and doesn't really relate to the industry and doesn't matter and blah, blah, blah. So as we all know, interest rates have gone up, right? Unless you're living under a rock, you know that. So last week, or actually may even been earlier this week, they hit 7%. Now, I think they've come back down. They've leveled out somewhere in between 6 and 7%. I have not checked today, but they are changing basically overnight. So we'll just settle in there to be conservative. The Fed has announced another 75 basis point hike in November, so next month, and then another 50 point basis hike in December. So that is going to obviously increase interest rates drastically. I believe that they'll do another one in Q1 of 23 because so much of their data takes time to catch up, especially as it relates to real estate. What you're going to see, what I believe you'll see is between those three rate hikes, I don't think you'll see one. I think you'll see those three, and then I think they'll wait and let data kind of catch up. Obviously, if you've been paying attention, and even if you just watch mainstream media, which I've talked about, I don't think you should. I think you should look at other sources, but it's very obvious to see that the housing market, especially residential, is slowing down. With that slowing, it's a bit of a delay, right? Home prices are starting to come down all over the country, starting to see it here in Utah to the tune of 10, 15, even 20%, depending on where you're at, compared to the highs being basically Q1, January to March was now what we know as the market high. So all of that is still catching up. And I think with all of these rate hikes coming, the data is going to come back beginning of Q2 that things are starting to slow down. Whether or not the Fed likes the rate things are slowing is another story. There's obviously some other things to pay attention to. Obviously, a big factor is energy, right? Oil prices going back up again due to Russia still at war with Ukraine. That's been a huge issue. So, and obviously energy prices are a major factor when it comes to CPI, basically the index that we all use to track inflation. Whether or not you believe that's the true index, personally, I don't. I think inflation is higher than that. Also, the CPI is pretty heavily controlled in terms of the data points that are fed into it by the Fed, by like the federal government. So whether or not we're really getting the true number there, I'll leave it up to you. Personally, I don't think it is. I think it's higher than 8%. I think it's upward of like 10, 12%. However, I do believe that as the data starts coming out for Q4 and then Q1 of next year, I think they'll start to see slowing. Now, again, whether or not that's a slowing they want to see, I'm not really sure. Then what'll happen based on that, if it is a slowing they want to see, I think they'll leave it. I do think that they won't make any changes. They'll let that interest rate sit and really let everything catch up. And I'm talking a true recession. I think next year I would prepare to weather the storm. And I don't mean this like go collect cash and put it under your mattress. You know, I'm not a proponent of that. With inflation so high, your money's burning. I think you need to be looking at inflation resistant asset classes that can still pay you. Now, I'm not saying go invest your rainy day fund. You need to have a rainy day fund. Everyone should have one. That's your oh crap fund, right? If you have a family, that's potential medical emergencies, whatever it may be, right? However, you should be still trying to put your money somewhere that can hedge against inflation, at least get you somewhere in the ballpark of 6-8%, so that you're not getting crushed so badly by inflation. So I think that if things are going the way they want by Q2, they'll leave it and interest rates will stay up. That at that point, you're probably looking somewhere in the 7-8% range. From there, I do believe that by Q3, Q4 of next year, you'll start to see it tick down. Now, if in the beginning of the year, things aren't going the way they want and they do another rate hike, I think that you'll definitely see it start ticking down by Q4 of next year, if not very early of 24. And I think that we need to prepare for interest rates to sit somewhere comfortably, like moving forward for the next, 5, 6, even 10 years in the 5% range, 4 to 6 range. I think mid to high 4s is the lowest you're going to see in the next probably 5 years. So that's essentially it. That's basically what I see happening for the next 12 months. I think next year is going to be very, very challenging. One thing, if you're an investor, education is important now more than ever. You need to be doing due diligence. I talked about this on my Instagram. You can follow me at Jonny Cattani. Due diligence is so important. And it's always important, even if we're in the best market ever, right? You really should know who you're putting your money with. But what's important now is that you're putting with people who have the track record, who have been through this stuff, who understand how this works, who understand capital preservation and, asset management and understanding data and how to, be nimble and move quickly, making sure you're with someone who's not spreading themselves too thin by acquiring too much, all the various factors that go into basically vetting a sponsor and an operator, right? It's so important that we're vetting our investments as we move forward, because we're not really sure what's going to happen. Like I said, this is all speculation. I'm not an economist. Even economists who, have PhDs from MIT are wrong. So this is just, my collection of thoughts from the data that I've gathered from talking to people, what I see happening over the next year. I do not think we should sit on the sidelines. I think it's okay to sit for a little bit. One thing I'll make a note of, which I've talked about before, this is the last year of 100% bonus depreciation. So if depreciation is a huge factor for you, if you're a high income earner and you want that depreciation, make sure you're obviously not just jumping in any deal. vetting your sponsors, but you want to make sure you're getting into deals before the end of this year, because this will be the last year of 100% bonus depreciation. Next year, we'll go to 80%. So there's my 2 cents and kind of my outlook for the next 12 months. That's what I think is going to happen. We'll see. But we do know for sure there's 2 more interest rate hikes coming this year between November and December. From there, we'll kind of see. But that's what I think is going to happen. I think we need to prepare for a bit of a rocky 2023. But if things go well and, barring any pandemics, knock on wood, or anything crazy, which we all know can happen tomorrow, I don't believe this recession will drag for very long. I believe you'll start to see it tick in our favor towards the end of next year, beginning of 24. And, we'll start to move out of it by the middle of 24 and be back to what will hopefully be the new normal, whatever that looks like, who knows. Again, pure speculation, but hopefully that helps. Hopefully that aligns with what you guys think as well. If you don't, let me know. You can always DM me. I'm happy to chat about anything. Of course, economics always. Again, you guys, in January, I wrote an ebook, Is Commercial Real Estate Recession Proof? Go download that. Go to investwithcattani.com. Go download the ebook. Again, follow me on Instagram at Jonny Cattani. You can follow me on TikTok at Jonny Cattani. Don't forget to rate, review, like, subscribe, all the great things. You guys are awesome. I'm so grateful. You guys, we are over 100,000 downloads now. That's absolutely incredible. Huge news. Cannot thank you guys, the listeners, of course, my amazing guests, of course, my team, my producer, my assistant have all been amazing. Very grateful. We're going to continue moving forward. I'm not stopping. I don't think you guys should stop. If you want to sit out for a little bit, fine. I get it. But don't sit too long, because then it gets hard to get back in. So have a great weekend. I am off. Got a wedding this weekend. One of my very best friends, shout out to Shane and Aaron, are getting married. So excited to celebrate them. And I believe that will bring wedding season to a close. So anyway, thank you guys for listening, and I will talk to you next week. See ya. Hey guys, thank you so much for watching today's episode. I hope you really enjoyed it. Listen, I know it's cliche and you hear it all the time, but please don't forget to like and subscribe to the channel so you know when the next video is coming out. Even though this is technically a daily podcast, you know it's coming out the next day. We have a ton of content coming your way. So please like and subscribe. It helps a ton. Leave comments. Would love to know what you guys think. And we will see you on the next one. Thanks so much.